Nifty is sitting right on the 24,000 line, and this is exactly where many traders make the biggest mistake, because after a 5-session rally, the market suddenly cooled down. Sensex fell more than 600 points. Nifty slipped 155 points. Its stocks dragged the market. Fizz turned sellers, and yet Nifty still managed to close just above 24,000. So the real question for Monday is simple. Is this a healthy pause before the next rally? Or is this the start of another correction? In this video, we will break down the 3 things that matter most right now: crude oil, the US Fed, and the key Nifty levels every Indian investor should watch. This is for education only, not financial advice. Let us start with the market action. On Friday, Indian markets ended their 5-day winning streak. Sensex dropped 607 points and closed at 76,802.90. Nifty fell 155 points and closed at 24,013.10. Now, that number is important. Nifty did fall, but it did not completely break down. It held around the 24,000 zone, which means the market is not clearly bearish yet. It is more like the market is saying, I need a reason to move higher. And the reasons for Friday's fall were not random. First, there was heavy selling in its stocks. Second, Fizz turned net sellers. Third, there was profit booking after the recent rally. Fourth, global cues were weak. And fifth, Middle East tensions kept traders cautious. So this was not just one bad day. This was a reminder that the rally still depends on global factors. For India, crude oil is not just a commodity, it is almost like a market mood indicator. When crude oil rises, India faces pressure because we import a large part of our energy needs. Higher oil can mean higher inflation, pressure on the rupee, higher import bills, and weaker market sentiment. But recently, crude oil has corrected sharply. According to market reports, Brent crude had surged near $126 per barrel earlier during peak tensions, but corrected below $78 per barrel last week as ceasefire hopes reduced the risk premium. That is why the market rallied earlier. Lower crude is good for India because it can help inflation, the rupee, fuel costs, transport costs, and corporate margins. But here is the problem. This oil relief is not fully stable yet. The same reports also warn that the ceasefire situation is not fully finalized, and any fresh tension around the Strait of Hormuz can bring volatility back very quickly. So for Monday, Indian investors should watch crude oil first. If crude stays calm, Nifty gets support. If crude jumps again, the market may become defensive. The second major trader is the US Federal Reserve. The Fed kept rates unchanged at 3.5% to 3.75% on June 17th. But the important part is not just the rate decision. The important part is the message. The Fed said inflation is still above its 2% goal, partly because of supply shocks in sectors like energy. That means rate cuts are not guaranteed. And for Indian markets, this matters because when US rates stay high, foreign investors become more cautious about emerging markets like India. If the Fed sounds hawkish, Fizz may pull money out. If the Fed sounds relaxed, global money can come back into risk assets. So even though the Fed meeting is over, its impact is not over. The market is still adjusting to this message. Rates may stay restrictive if inflation does not cool. That is why Monday's market is not just about Nifty charts, it is also about global liquidity. Now let us talk about the actual Nifty setup. Nifty closed the week with a gain of 390 points, or around 1.65%. Volatility also cooled, with India VIX falling 11.89% to 12.97. That is a positive sign. Lower VIX usually means less panic and more confidence, but the bigger issue is resistance. Market analysis suggests immediate resistance around 24,250 and 24,400. Above that, the bigger supply zone is 24,500 to 24,850. This is where the market may face selling pressure. On the downside, support is around 23,850 and then 23,700. So Monday's setup is simple. If Nifty holds 24,000 and moves above 24,250, buyers may try to regain control. If Nifty slips below 23,850, traders may become cautious again. And if Nifty gets stuck between these levels, stock-specific action may matter more than index direction. This is where many beginners make a mistake. They only look at Nifty and forget that sectors move differently. Right now, It has been weak. Financial services and auto are also under pressure in relative terms. Meanwhile, areas like media, mid-caps, and energy have shown better relative strength in some market rotation data. But that does not mean blindly buying those sectors. It means the market is selective. This is not the kind of market where every stock goes up together. If Nifty breaks higher, leadership matters. If Nifty fails, weak sectors may fall faster. So instead of chasing random stocks, investors should ask, is this stock showing relative strength, or is it only moving because the market moved? So here is the Monday plan. First, watch crude oil. If crude remains soft, India gets a macro cushion. If crude spikes again, be careful. Second, watch fizz. If foreign investors keep selling, rallies may face pressure. Third, watch 24,000 on Nifty. This is the psychological line. Holding above it keeps the market constructive. Breaking below it can trigger nervousness. Fourth, watch 24,250 to 24,400. This is where the first real test comes. Fifth, do not chase a gap up blindly. If the market opens strong but volume is weak, it can reverse. If the market opens weak but holds support, buyers may step in. The smartest approach right now is not aggression, it is confirmation. So is Nifty ready to rally or correct? The honest answer is the market is at a decision point. The bulls have one advantage. Nifty is still holding around 24,000. Crude oil has cooled and volatility has dropped. The bears have one warning. Friday's fall showed profit booking, FICCI selling, weakest stocks, and global uncertainty are still active. So Monday is not about predicting blindly. It is about watching whether Nifty respects 24,000, whether crude stays calm, and whether buyers can push the index above 24,250. If that happens, the rally can continue. If not, this market may need more time before the next big move. Comment below. Do you think Nifty breaks above 24,250 this week or slips below 23,850 first? And subscribe for simple Indian market breakdowns without hype.